Hi everybody, this is Kevin Gormley, and again we're here with the top 10 retirement mistakes that we see people make from leading edge financial planning. So welcome, Charlie.
Welcome, thank you.
Yeah, so today the mistake is that taking financial advice from a salesperson as opposed to a fiduciary. So first of all, Charlie, we all have to sell something. I mean, if you're in a business, you need to promote your business, you need to get people to come to see you. We feel that in the financial planning arena and the investment arena, it's just better to have somebody that's a fiduciary that makes recommendations as opposed to someone that's trying to sell a product.
Yeah, goes along with. But basically, it's, you're a fiduciary if you put your client's interest always above your own. And that means you don't profit any more or less depending on what advice you give. And so that's kind of the basic nuts and bolts, and the way I interpret that legal jargon. Kevin, what do you think?
Yeah, so if you're going to use an individual, a financial planner or someone to help you, a guide, you're going to pay them something. The real issue around the fiduciary standard is, everybody thinks, well, that person is a nice guy, nice lady. They're going to put me first, obviously. But most of the people, about 90% of the people that work in our industry actually can get paid more if they not only put your interest first, but they also put their own interest first in how they're going to get paid. And so that's really the issue is the advice that you're receiving, is it based on, when you're doing a financial plan and you're going to sell an annuity at the end of the financial plan, is that financial plan going to be biased by the fact that you really want to sell an annuity because that's how you're going to get paid to do the planning.
That's right. And they're, people are good and everybody has good intentions, but sometimes people are placed in situations and business models where they have to have a commission on a product, period.
That's right.
So,
that's right.
The most important thing is just be aware of your options and what you're working with. Speaking of options, number 2 is, what are the compensation options? How do people get paid in the financial planning, wealth management world, whatever you want to call it? What are the options?
Yeah, so really on one end of the spectrum, it's all commission. This is the old model, okay? So person was going to get commission anytime you bought, sold, did something, anytime money moved, okay? On the other end of the spectrum, which is where we are, is fee only. So, you pay us, the client pays us only. Client pays the fee only, advisor only if it's a different advisor. So those two things seem to make some sense. So the fee only takes no commissions. The one that's a little confusing, Charlie, is the one in the middle where the person is getting a fee to help you manage your money, but also has the ability to take a commission as well. So do you want to elaborate a little bit on that one?
Yeah, the waters get muddied a little bit there because theoretically, if someone's acting as a fiduciary, they need to communicate that to you, and you'll be aware of that. In this model, which a lot of people operate that we know, there's nothing wrong with it, but theoretically they have to take off the fiduciary hat, tell you that they're now acting on a sales commission model where they might sell an annuity or a
suitability.
Suitability, yes, just a different standard. So just be aware of that they're able to, I think it's duly registered is really the right term there. But again, just 3 different models. Just be aware of what your options are, how that person's getting paid, which leads us into the 3rd point.
Well, before we get to that, there's one question that you can ask a financial person. And the question is, do you ever get a commission? Ever. Do you ever get a commission?
Yeah.
Do you ever take a commission? Do you ever get paid a fee if you do one thing versus the other? Because a lot of people will say they're fiduciaries, but then they don't mention when they go to help you with an insurance product, they'll actually make a commission. So do you ever get commission? Really, again, I think that's the best question to ask. So number 3.
Yeah, number 3, we've kind of talked about it a little bit in the first 2 points, but why is it important to understand if somebody's a fiduciary for you or not?
Yeah, so a doctor, let's say a doctor, who we all respect physicians, at least 98% of the physicians. If a doctor was to diagnose you with a problem and then prescribe a drug which they actually got a commission on, do you think that would be appropriate?
Right, yeah.
What if a tax CPA filled out your tax form and had a deal with the IRS that if you paid more tax to them, they would make more money? Would that be appropriate? Absolutely not. And then so the third issue is a financial person going through the financial plan And again, maybe they have bias or not during the planning, but then at the end, they make recommendations where they're going to make a commission. Is that appropriate? And again, Charlie and I, obviously, we're fee only. We do have some biases. We're not perfect either. It's not so much the people that are in the commission model. It's the structure itself is not really suited to help people and guide people along the rest of the life journey. So with that, Charlie, do you have anything else?
That's it. Just be aware of what you're working under, how someone's getting paid, and how they're helping you.
Thanks for watching. Next up is the #1 retirement mistake, so stay tuned.
Don't miss it.